Hello, I'm pleased to be here and to exchange views with you on the prospects of the global economy. Um, we have had a very difficult situation since 2006, since the crisis. It's almost 9 years ago, and we are still, in a sense, being affected by it. We are looking at a period of slow economic growth, a lot of difficulties ahead, a lot of impediments which are likely to arise as we move into 2017. So I'm concerned about the imbalances and the financial market volatility which is likely to arise, particularly with respect to the exit of Britain from the common market or from the European Union. That creates a period of instability because over the next 6 to 12 months, there's obviously going to be a lot of discussions within the European Union and also with the United Kingdom to see what are the terms of the exit and what sort of negotiations are likely to take place. One of the distressing effects is that there are many groups in various European countries who want a new deal or at least want a re-examination of the European Union, and some even seeking an exit. So that is a source of difficulty and instability likely arise from that. Now, in a frail economic environment, a shock of this nature has a very significant impact on financial markets, and what we have experienced in the last week, at least, has been a tremendous amount of volatility in financial markets. And we have seen the currencies in a roller coaster. For example, the British pound has fallen in value considerably, and so has the euro. But the beneficiaries have been the yen, the Swiss franc, and the US dollar. So that is what the environment in which we are living. And of course, the scepter of protectionism has come to the forefront as well. And that is something which we have to be quite aware of in the year of the presidential election in the United States as well. Now, to give you a perspective on where we see things going, or where I see things going in the next 6 to 18 months, it is hard to see much growth coming in the global economy. I'm anticipating 2.8% growth in the global economy in 2016, and possibly 3 or less in 2017. And that is a period of very slow growth, and most of it is really because of the European Union growth rate has been low, but also in the case of Japan, the growth rate has been very low. And consequently, there are some repercussions which accrue from that development. So there are some significant developments which are taking place. For example, in the Middle East, you've always had a conflict between Iran and Saudi Arabia in terms of the output that they would provide in terms of oil. And Iran has a capability of producing 3.2 million barrels a day. And if they get to that capacity, the price of oil would obviously fall. I want to give you some perspective with respect to Canada and the United States. Starting with the United States to begin with, it seems to me that the U.S. is in a reasonably good position as far as economic growth is concerned. We are expecting about 1.8% this year and maybe 2.2% next year. However, the Federal Reserve Board is unlikely to raise interest rates because, first, the U.S. economy is not robust, and secondly, as a result of the exit of Britain from the European Union and the instability that that has caused, it is likely that the Federal Reserve will maintain its neutral stance for a long period of time, and I don't really foresee interest rates rising much before the end of 2017 in the case of the United States. I also see a period in which the dollar will gain in value, which will have an adverse effect on the balance of payments of the United States, especially on the current account. And its net exports would obviously suffer. So that is a negative for the United States. Plus, you have possibility of political instability after the presidential election, in the sense that we may have a logjam in the Congress, depending upon who is the president, whether it's Hillary or whether it's Donald Trump, are the issues which we have to resolve, and we will only know the outcome of that at the end of November. Third, I think it's important to remember that business fixed investment in the United States has been quite low, and because businesses are really looking to see a period of stability and some certainty, which they don't seem to be getting at this point. So the main risk in the United States is that the external environment becomes weaker, i.e. Europe growth rate is much lower than 1.3% that I have. And secondly, that there is difficulties also in the case of the emerging markets, especially in China as it goes into transition. On the Canadian side, before I get to the Canadian side, it's important to say that the United States does have room on the fiscal side to provide stimulus, because they brought their deficit to GDP ratio down significantly to about 2.9%, and they also have a debt to GDP ratio of about 73%. So they do have some latitude to increase the fiscal push into 2017, and this is what I would expect the new president to do. On the Canadian side, our fiscal situation is much better. Our deficit to GDP ratio is very low, and our debt to GDP ratio is about 32%. And so I think the Trudeau government is likely to provide stimulus in the coming years, especially for infrastructure and technology and biotech and the other sectors which are the growth industries of the future, and certainly also in the medical field and education. And secondly, on the monetary side, I think the Bank of Canada is likely to maintain interest rates at the current levels and to be ready to provide liquidity whenever it is needed. So that is what I would foresee developing over the next 12 to 18 months. Third, I think our housing market, though it is bloated in the case of Toronto and Vancouver, overall the house prices have been quite reasonable in the 5 to 6% range. And of course, the debt servicing costs are very low, so I don't really see a collapse of the housing market. What I do see is that business fixed investment will be quite low and may in fact be negative because of the uncertainties which arise. We are, of course, vulnerable to commodity prices and also vulnerable to the price of oil. So as the US dollar rises in value, I would expect the commodity prices will fall, but also oil prices may come down, especially if the confrontation between Saudi Arabia and Iran were to become even more hostile. There are, of course, weaknesses in most of the OECD countries. For example, if you look at Japan, it has a bloated fiscal deficit, it has a very large debt ratio, but at the same time, Abenomics has not really worked, and the growth rate in Japan has been considerably less than 0.5%. And of course, this is a new adverse effect which arises, and because the yen has risen in value as well. So the US, is, of course, relies on what the external environment is, and also relies on the second largest economy in the world, which is China. We also are very dependent upon what happens in China, and our commodity prices, iron ore and others, are, we export a lot to China, and that is a crucial source of our income growth. So we have to monitor developments in China very closely to see how we develop. Some of the trade treaties which are being talked about, for example, NAFTA, the TPP, and CETA, which is the trade treaty with the European Union, these are likely to be signed, but the NAFTA, of course, has been signed, but people have been asking for a renegotiation and rethink of that treaty as well. And with the Mexican president here, there are negotiations taking place right at this moment in Ottawa between the three amigos. So to conclude, I think we are in a period of slow economic growth. I call it secular economic growth slow because our productivity has declined in the major countries, and labor force participations have not been all that great. So consequently, the secular growth rate is less than 2%. Secondly, we are in a period of very low inflation and negative interest rates as we go forward, both at the short end and also at the long end. And we are in a period of currency imbalances where the US dollar would gain in value, as with the yen and the Swiss franc. So I am concerned about protectionism, and there's obviously a period of very significant political instability in Europe and possibly in the United States, depending upon what is the election outcome. Thank you very much, and with that, I'll be happy to take questions from you.